Good morning, traders and investors around the world, and welcome to Friday's edition of Pre-Market Info. Brent, how you doing this morning?
Great. Yes, another Friday. How you doing this morning? Back at you, he says.
TGIF, I guess.
What's that mean?
Oh, come on, you know what TGIF is. Thank God it's Friday.
Woohoo! Friday! Yeah! Sweet. How's
I thought
everyone
it was
else
thank
doing
God
out
it's the
there?
Fed.
Thank God it's the Fed.
Oh man, that's what the market
That
says, right?
seems scary.
Yeah,
Seems
that's how
concerning.
it works. That's how it works.
I
Fed
think,
stimulation forever.
I think, Jake,
Draghi's got the backing, or Draghi's back in the EU cuts him last week. Fed stimulation around the world. Thank God it's the Fed. TGIF.
I think Shaky Jake thought the weekend already started here because he slept in a little bit and just got into mission control.
How did I know that I would be taking some flack for my alarm not working this morning? Knew I'd be catching flack for that.
Always excuses. Always excuses. S&P futures. A huge 4-point range overnight, Joel. 1796 we've been up to. We've been down to 1792. And we're stuck in the middle here at 1794 and a half.
Only have two levels here. We hit 95 and a half on yesterday's trading, 96 at pre-market high. I won't attempt to call that a double top because I'm sure we'll rocket through that this morning. The all-time high, 1799.75. We made that earlier in the week. Above that, you sneak into the 1800 handle. If you're looking for support here, coming down on the downside, 1788 and a quarter is my swing number. We hold above that. We're good to perhaps post our second close in a row over 16,000. Woo!
Ooh, and look at the crude. Down 12 cents here today, but it was rallying pretty good yesterday. Pretty good breakout day there for crude, Joel. You've been calling that bottom there for a while here now, and you finally got a little bit of a pop.
Yeah, I've been calling it since 96, but look at those multiple lows in the 93 handle.
Yep.
5 or 6, 7 lows. Built a little base, and then you got a little bit of a rally yesterday. You took out that major resistance at 95.20. Had 3 tops in that area. We did take that out. Haven't been able to get to Friday's high yet. Or just Friday, what am I talking about? Haven't been able to get to Thursday's high yet, 95.63. So we'll look at that as a resistance point. And after that, things open up. But still got to get through that 95.63 level.
Gold, a little rally here too. We're up just about $3-4 here. So holding on okay here, gold. But those miners, man, they were getting beat up again yesterday.
Gold futures trading up 360 here, 7 point range, trading at the high. Yesterday's low, 1235.80. You did get below that 4020 low from Wednesday, so you do have some temporary support building at the 1240 area. If you're tempted to try and pick another bottom in gold here, you got the pretty good support at that 1235, 1240 area.
The miners did continue the sell-off there yesterday. They gave you a shot in the pre-market on Barrick Gold. It was trading up to 1730. It never saw that level in the regular session. Opened at 1702 and up to 1712. And then the bottom fell out of it again. Got all the way down to 1656 before settling at 1685. So did cascade through half of the 16 handle.
Yeah, that's a pretty ugly 4 or 5 day move here. You did get a bounce from the 1657 level, closed at 1685. I guess sellers probably be ganging up again at the $17 level unless get a nice rally here in the bullion. Just ugly looking chart here. I mean, what else can you say about it? Candlesticks, bar charts, whatever you're looking at, that's just one sick looking chart.
And Gold Corp doesn't look well either. GG made a new low on the move yesterday. We had talked about it was kicking right around there at the double bottom, but we were a little bit nervous because Barrick was breaking down, and GG did take that low out yesterday, but closed up, or it closed a little bit stronger. 22.71 was the low. It did close 60 cents off the low at 23.31, so showed a little bit of a life. Could that be a key reversal for Gold Corp, or are they just going to run in the same sellers when it starts getting up there in the upper 23s?
23.31. That thing had a pretty good range for a
It did.
$24 stock. Opened up at 24.37, and you did get a little pop up that 24.55, but once it came back down through the open, which coincided with Wednesday's close, it was lights out for GG here. You set a new low for the move, didn't this have a low in July at 22.22 in Gold Corp? I do see that. So
Yeah, it did.
yeah,
New move. It depends your time frame. I'm looking at just from the time frame in the last 4 months. So new low in the last 4 months, but not a new yearly low here. Just a
yeah.
new low on this most recent move from the 32 area all the way down.
I guess we'll just have to wait for Dennis Gartman to come back on CNBC and then get his prediction for gold, and then
Long of gold, short of gold.
yeah, and then we'll go the other way.
Yeah, yeah. Poor Dennis Gartman. He had it wrong there for a long time. Maybe he's getting better now though at predicting stuff. He used to have an ETF out there too. I don't know what the symbol is on that ETF, but
GART.
GART. I think you're making that one. Gart. The Gart.
Gart.
Yeah.
I get
Gart.
it. It took me a couple seconds, but I got it.
We did have a lot of retailers report here overnight. The Gap reported last night. GPS actually trading kind of flat here now, though. 72 cents versus 71 cents, and 3.98 billion versus 3.97 billion. Did announce a $1 billion stock buyback too, but the Great Wall of Gibraltar here, or the Great Wall of Gap, this $42 area has just been thick. It did get up there a few times even this morning, but it cannot hold that area. I don't know if it's going to be able to break through this 42 handle.
42.60, just a little odd lot there from the little old lady from Pasadena trying to paint the tape up there at 42.60 so she could get her 50,000 share order at 42 done. But it's 42. Look at the last couple days trading 41.90, 41.91, 41.97, 42.11. Those are the three tops you got to keep an eye on. Seller just probably waiting at 42. Above that, 42.45 been the recent high of the move.
Wasn't that Commodore's going to be the theme today here, Joe? What were you saying? 1, 2, 3 times a top? Short.
yeah, but Joe couldn't get the old Lionel Richie song queued up enough, so we'll get that, but on Monday. But now
Joe should be singing in the background.
Oh,
here.
sure,
Come
make
on,
me
Joe.
look like I'm not tech savvy. Yeah.
Come on, Joe, you can sing this.
Couldn't you bring in a record or an
Times
8-track or
short
something, Joe?
Oh yes, I like that. I didn't know that, Brent. You should try out for American Idol. You're pretty good there.
Thanks,
Actually,
Dennis. I appreciate
I think
that.
Brent missed the cutoff already, though. I think you
Oh,
can't be
it's
older
always
than
next year.
28. Sorry, Brent.
What?
Brent.
Are you serious?
Brad, I think you can mustache your way in there.
You know when American Idol. Remember when they used to have that website Trade Sports and InTrade, Dennis? Remember we talked about that, and it's where it was a great site too. They took it down several years ago, but you could wait. They were the one that had elections. You could wager on elections and stuff. Well, I was playing American Idol one time. And
Trade anything.
I swear to God, and I was trading American Idol, and who was that one guy?
Are you going for Clay Aiken?
No, this was post Clay Aiken. Who was the fat gray-haired guy that won?
Taylor Hicks.
Yeah,
Wasn't it
yeah,
Taylor
yeah. And so,
Dennis for the win.
and so I had Trade Sports up, and I had it queued because everyone thought he was going to win. And as soon as they came on the to announce it, like I looked at who was the host back then, I can't remember, and I saw he was saying
Ryan Seacrest.
yeah, Ryan,
the host.
and you could tell that he was going to start it with a T, and it was still offered at 85% probability on Trade Sports at the time. So
Grabbing.
man, I put an order in to
Or-
buy it all the way up to 99, and I think I got a couple hundred contracts off, and it ended up of course expiring at at 100, so full value. But
The news arbitrage right there on American Idol. Joel running the news
I don't think I've
algo.
ever heard somebody trade American Idol before, but if anybody would, it would be you, Joel.
So you must have went out and bought the Taylor Hicks CD after that, didn't you, Joel? You had to do that.
I gotta see what this guy's about.
I don't even know what he sings at all, but Joel always has a soft spot for gray-haired guys.
because I am one.
Actually, you're pretty good with the gray hair, but And Taylor also reporting, as we digress, we better get back onto the stocks here. People are like, what the hell? And Taylor, 36.27 close, trading down 60 cents right now. They just reported here about 10 minutes ago. 89 cents versus 86 cents, 657.5 million versus 654.2 million. And actually, the revenue here, I've got two numbers. Man, I must be not reading my notes here this morning. So now I see 640. So there must be a guiding lower on sales on Ann Taylor. Is that what's happening here?
I believe so. Let me pull it up real quick. I was
All right,
still
we're
laughing at
Benzinga
that.
News team. I can't read my own handwriting here.
Still
So
laughing at your gray-haired comment. Yeah, I see fiscal year 13 sales. Just a little bit. It was at two. They were at 2.52 billion. Now they're at 2.51 billion.
okay, so just
Just
slightly.
real slight.
So Ann
But
Taylor here is trading slightly down, and we have major resistance. It's a ways away up there in the $37 area where we put in, I don't know, one, two, three, four tops in the last 2 months, four high, like major tops in the last 2 months. So that is your three, four tops is a lady or whatever your song is there, Joel, right up there. But stock is trading down here today, so I don't know if that's going to come into play.
We got a spike up initially on the news into the 36 handle, 36.50. Quite a turnaround on the same bracket here. Comes down to 35.50. So those are your early parameters. Looking at Ann Taylor on a daily chart here. You're right, major resistance up at 37, but it did bump up against 36.56 2 days ago, 36.42 on Thursday. So I call 36.50 the major resistance. Coming down, we are trading at yesterday's low, 35.81, and then you had another low at 35.71. But I don't like the way it looks under 35.71. So if you're trying to play this from the long side, it just doesn't look healthy under 35.71.
Foot Locker also reported this morning beating on both the top and the bottom, 68 versus 66 and 1.62 billion versus 1.57 billion. Stock is trading up $1 right now, actually $1.24 at 38 bucks even. Closed at 36.76. This is a multi-year high for the stock up here over 38. You'd think it's going to be able to open over there. I think the all-time high, or actually the high from the last few years anyways, 37.85, which was just set back in the week of August of 2013. Obviously, some major resistance up there, but if it can open above there, it would be in breakout mode.
38.80 is the pre-market high. Pulled back.
Whoa.
I got really excited about Foot Locker there. Looking at after the decline after that, took it down to 37.70. So those are a couple levels to keep an eye on. Taking a look at the daily chart, you did identify that resistance, a former all-time high in this issue. It was actually a double top. 37.43 to 46, so that area will act as support if Foot Locker goes into reverse.
Some of these stocks had pretty wild after hours ranges. I'm looking at Pandora Media. It was bouncing around pretty good, but you come in now and they're flat. So if you like you missed all the after hours action, like, it was a non-event, this Pandora earnings. 6 cents versus 6 cents, 180 versus 174 million. Slightly lower on the guidance, 2 to 4 cents. Estimates were at 4 cents. And it was actually chopping around pretty good, symbol P there. Chopping around, but now it's just kind of hanging out here flat.
We haven't looked at this stock in a while. Did they make any money, or was it just a case of
They made
them?
6 cents, so they are making a little
Oh,
bit.
wow!
6 cents. Woo. I don't know how to calculate the multiple on that thing, but
They're infinity and beyond here. Looking at the pre-market trading, did get a big bar here on the announcement. Got up to 29.96 and then crashed all the way down to 27.40. Boy, this is
it got to 27.40.
Yeah,
And now it's back up at 29.55. Man, these after hours ranges, holy cow, they've really been chopping around.
Looking at the daily charts here for shares of Pandora, the stock, it's been doing well. It had a little problems off the IPO. We all can remember that, but it's recovered nicely since that. 29.92 was yesterday's high. Use that as resistance. We're trading flat here, basically. Above that, you sneak into the 30 handle, 30.33. Super major extra support at the $28 level. 20, yeah, 28.02 and 28.29. I've on a decline now. You should find some good buyers at that level.
We have a ton of analyst moves here today. Upgrades, downgrades, all over the place. Let's start with Wells Fargo. They are downgrading X and they are downgrading NUE. So Wells Fargo not liking the steal here this morning. X has been toppy here for a while. Look at this X chart on the daily. Ooh, oh my goodness, that looks like. What does that look like? I don't know what that pattern is.
I'm having a little trouble.
The X on this.
Yeah, I'm still trying to.
Well,
I got to do some reprogramming.
I'll tell you what the X chart looks like. It looks like a head and shoulders forming to me. You got this left shoulder happening over here at 27.60, 27.65. It broke out through 28. The breakout becomes a fake out up there, 28.41. Another top at 28.14, and now it's made three right shoulders right in that whole 27.60, 27.70 area again. And what happens? Wells Fargo must be pattern traders over there. They look overnight and they downgrade the thing, and it's trading down 40 cents right now.
26.63. It got a little bounce off that level. Who's the guy on CNBC? He's a technical guy. He kind of screams and they have him.
I just call him the technical yeller. I mean, I don't know. He just comes on and just yells about technicals, and then I think they just shut off his feed.
He was talking yesterday about how this thing was breaking out and major buy and everything. So obviously,
it's a little underwater here this morning.
Wells Fargo's not agreeing with that. $27 level. I'm going to use that. I'm not going to get too upset about this thing. If it closes under 27, Dennis, I look at perhaps your pattern coming to fruition here. If it can get back today, I mean, it's only 30 cents away from there. If you get back and hold 27 here, I think this is still a good pattern on the upside.
I don't know if I agree with you. We'll have a bet on this one. I think it's breaking down, and I think it could eventually see the lower 26s here in the next few days. NUE also downgraded Wells Fargo. So what's the technical saying on this one? It's actually no trades yet, offered at 52.70 right now, which would put it down 35 cents.
NUE. There was some analysts downgrading that last week too, as well.
I feel like there's been a lot of analyst action on X and NUE lately.
Major support at the $52 level, almost exact double bottom there, going back 7-8 trading sessions, 52.03, 52.08, another low right under there at 51.80. So buck away from there. I think if it gets down there today, at least on the first time, you should get a little bit of a bounce. And the close and the high, 53.05 and 53.10. I mean, if you have to, with the downgrade, you have to respect that as a resistance level. Above that, you got major resistance at the 53.50, 53.60 level. Three concurrent tops at that level.
I like that 52 number just because he did have that double bottom 52.03 and 52.08. And then if you look back in mid-October to late October, we were trying to get through 52 and we were trying, and we couldn't get through it. It was resistance. So old resistance becoming support. Did bounce off there once. I think it gets down here today and may bounce there again. It starts taking out the third time, and we don't like the triple bottom thing or the three bottoms.
Hey, Dennis, and that Wells Fargo analyst did put an underperform rating on U.S. Steel while he kept Nucor at a market perform, so he's a little more bearish on U.S. Steel. Just wanted to note that real quick.
Thanks, Brent. Looking here at a few other ones that are getting analyst moves. Micron was flying yesterday there. It was really popping. What was the news? I forget what the news was on Micron because it made a new 52-week high here, breaking out over $20 yesterday.
It was the old Einhorn.
And what was he saying?
He was at the Robinhood conference, Bloomberg's Robinhood conference going on right now. It's going to happen today. It happened yesterday. And he just said he's long the stock.
He's long the stock, so disclosing that Einhorn owns Micron, and that popped the stock over $20 yesterday.
If you look at the chart, I mean, kind of looked like there was some people that were anticipating it out there. I mean, it popped right when he said that at the Robinhood conference, but I mean, it was up like 2 or 3% prior to that move.
This has got to be quietly one of the best stocks of the year. This stock 1 year ago in October was $5. So, and now this stock is $20. So this is quietly just quadrupled here. Started the year in January at $6. So this has got to be one of the best stocks of the year. Just been flying here. This morning, though, Bank of America is downgrading the stock and is pulling back 11 cents here. But is this one of those downgrades where people are going to just come back in and buy it?
Well, there's some news also out of the DRAM exchange saying that DRAM contract prices are expected to remain flat or fall slightly in the fourth quarter. So that was actually some bearish news there. I think the downgrade may be linked more to that than to the price action that we saw yesterday.
I used to trade this stock years ago, Joel, and I don't know how far you can go back on the chart, but I can remember in the early 2000s here, after this thing broke down, it had a level at $20 that was crazy, and I don't know if you can see that. I think it was like probably back in 02 and 03, after the tech bubble burst there, but I just remember that number, and I'm looking back on my chart here, and it's only going back to 2005, so this is as high as we've been since 2005. You can go further back, though. You see any of those levels? Like, obviously, if you look at that, that's the tech bubble. There is your tech bubble. You can see it there where we got to ridiculous levels on everything, where technology companies were taking over the world, and that obviously didn't happen. But that $20 level was huge back in the day. So I'm wondering if it does come into play now.
Got knocked down on the downgrade to 1960, getting a pop back up here over the $20 level. You got to respect yesterday's high at 2009. But I just have a quick question regarding the Robinhood conference. What do they do there? Do they steal from the rich and give to the poor?
Ho ho ho! I get it. I see what you did there. See what you did there, Joel. In all seriousness, Ackman today will be taking the stage.
Ooh.
I'm looking.
Will he talk about Herbalife and how good of a short it is?
I'm sure he will. I'm sure he will. He'll be touting that. I do see also Whitney Tilson. Let me see. Just really, Julian Robertson.
Do you know where this is? Where does this take place at? Where did you say it is?
I believe it's in New York City.
Oh yeah.
Actually, it's in the Sherwood Forest.
Oh, Joel's just full of the jokes here today. TGIF right there. Thank God. But we got quite a bit of other upgrades and downgrades here too. So let's move on to a few of these other ones before Joel kills us with his jokes. DLTR, after having not so great of a day yesterday off of their earnings report, it is getting upgraded at Barclays here today. So you bottomed over there yesterday at 55.15. You closed about a point off the lows of 56.28. Now you're getting an upgrade from Barclays up to 56.75. What do you think on this one? DLTR.
I don't know. I mean, when these stocks have these big declines and then they get an upgrade, it just makes you a little bit skeptical here. I'd like to see a little bit. I mean, that's an ugly chart. Above 57, you got a major gap to fill. The news has not been able to take it back above the $57 level. So I think I'd be pretty much hands off here at 57. Did notice that it did come down to 55.15 and tried to fill, or it almost filled that gap. You had a gap to fill at 54.99. So for you pattern traders there, I guess you can consider that a filled gap. I would just keep an eye on the close here. If you get a pullback from the close and it holds, you'll get a chance to go back up to the $57 area. Obviously, there's nothing after that. Who was it with the downgrade? Upgrade.
Barclays is upgrading it this morning, so the European bank coming out and defending the stock here, basically. But I will tell you, and I kind of agree with you, it's hard when you get a stock after a big down move like that. There's still a lot of dust to settle in that thing. So sometimes the downgrade or upgrades can have a muted effect here. It's obviously pushing the stock up this morning, though. We've had 600 shares here trade up to 56.75, so it is getting a little bit of a lift here. But I'm just kind of skeptical of this rally. Also, looking yesterday at another stock, it seems like everybody's coming out and upgrading stocks that got killed yesterday. GameStop got absolutely murdered yesterday. GME traded down to a low of 46.66, closed $2 off the low of 48.80. Is getting upgraded at Needham today and is trading up about 70 cents right now. Just ticked up to 49.70. So it is coming back here, but again, the same story. You got a stock that has obviously just had a disaster day getting upgrade. I wonder if investors come in and say, "Oh, that's good enough. If you can get me up there to scratch yesterday, especially if you were just down a couple of points in it." I think you're going to run the resistance up here in the $50 area.
You got the same kind of scenario there here where you have the terrible day, you get the upgrade, still has not taken it through resistance here. 50 and a quarter was yesterday's high. I don't think I could get too excited about that stock until it gets above and holds that $50 level. Above that, you got a gap there up to the 52. So just don't like it. I just don't like when stocks have a big downlight day. I mean, what are you supposed to do? Go out and buy it after a day like that? I mean, how many times do stocks just get pounded like that and just turn around on one day? I mean, if
Rare.
yeah, unless Goldman Sachs comes out and puts it on its conviction, you have to buy it at the market list. It's I just don't see a lot of follow through in this.
Yeah, and we are seeing the other thing happen here today too. Target had a terrible day there yesterday. It was trading down very weak, obviously. Got down to as low as 63.49, closed off the low, and Bank of America comes out and downgrades the stock today. So there's something, where they're actually following through on the momentum here now. 63.70 is where it's trading at right now, down another 50 cents, which is right about 20 cents off the previous day's low. So if it can take out the previous day's low, then it starts to open up there again for Target.
I was highlighting this one, when we went into the broadcast, when we went live at 9:30. You did have a pre-market low at like 63.55, I believe, and it got down there a few times, and it held. And I just wanted to put that out there as an example of when the pre-market levels,
Yeah.
can follow through into the regular session. So that was one area. I mean, this 63.49 area, Dennis, this is very, very, very interesting. This could be, I might have to do a blog on this. This could be the chart of the day here.
Yeah.
63.50 was your low on the 30th. Another low at 63.56. Another low right at that area at 63.61. And then you go back 63.57, a low on October 17th. There's a level you got to hold. This downgrade has not taken it back down through that level. So maybe they just going to get filled on all their buys there at 63.50 and putting out there a little downgrade here. But that is some major support. That takes that out, down to the 63 level and perhaps down to 62 and a half.
Seems like this is a theme today, that there's a lot of really big levels here. Obviously, we're seeing it on Target, but we've seen it on a few other stocks there too. If you look at Procter and Gamble, just to digress away from the ratings for a second, this $85 level is starting to become absolutely enormous. Now, 4 days out of the last 5, we've topped out in the 84.80s or 84.90s. Got up as high as 84.98. We've been highlighting that there's some institution that wants out of that stock up there at the point at 85, and the opportunistic traders and probably the high frequency guys too, just kind of feeding on him a little bit there. They keep selling in front of him.
Watch out! Only a 40-cent range yesterday in the issue. Yeah, there's a very good chance that this thing is going to go crack next week. I threw in the towel on the weekly 85 puts yesterday. They were just grinding me, and I didn't feel like losing a dime overnight here. I really thought that he had 4 consecutive lows between 84.16 and 84.24. Really didn't think that was going to hold up, but kind of got bailed out by the market and has held that level. But I'll be keeping an eye on that for next week, because this thing has had a monster run here. Since October, just like the rest of the world, just like the rest of the market here. You are consolidating when you do have a tight range in a stock, especially like PG. You're getting a 40-cent range in there yesterday. You got the institutional size at 85. Maybe for once I'll put on both sides of a strangle. The 84.5 put and the 85 call, because this thing is very due to make a big move here.
But again, Joel, I'm going to warn you, resistance is resistance and support is support until it's broken. And if you've been playing that channel for the last 4 days, you've been making money. So wait, maybe sometimes it's good on those strangles to break. Wait till they actually do take out that size at 85, because you never know. Sometimes, like I said, I can remember that trade I had in General Electric back in 2000 or 2001. I did the one level, I think 16 times I did it. And it just had, basically 15 tops there in a row. And I was able to, and that was back when, I guess it was before 2000 because it was back in the teeny days. Because I can remember I was like leaning on the level at 15 teenies right under the point and able to cover it multiple times for like a half a point. And you sit there and you can make it a lot of times. So when you find a level that's working for you, I keep playing it until it doesn't work anymore. Also, if you want another big level here, Coca-Cola 40.5 is starting to become huge. There is an institution sitting there trying to sell some stock, and they are selling right in front of him again. We had a high back on the 14th of 40.44. We had a high 2 days ago of 40.45, and we had a high yesterday. Can't get much closer than that, 40.49.5. But it just doesn't want to take out that 40.50 guy. Joel?
It's been sitting it up there. Hey, it was the first time I did it today. 40.50, you've hit that level several times. 40.45, 40.49. Also had a high of 40.44. Dennis, how big is that actual size there that you have at 40.50?
I don't see it now, so I did see it in the book earlier, but somebody's covering some stuff up there now. But I did see 70,000 shares, which is significant there. Oh, no, there he is. He just popped out. He must have heard me talking about him. 169,000 shares now. So 40.5, that's right from the New York book if you subscribe to that data. 169,000 shares. All the high-frequency guys and everybody else subscribes to it. So it's key data that obviously, impacts price. And just think about it. You got like a brick wall there, 40.5. It takes 170,000 shares to get through there of buying pressure. So until it can get that kind of buying pressure at that spot in time, it's hard to go through there. So unless some big institution comes in or there gets too many people, a lot of times what you'll see is it'll trade there most of the day, and then there's too many people short in front of it, and then it can take it out and catch those guys. But 1, 2, 3 times here, it's tried to get it and take it out and hasn't been able to yet.
Yeah, that you also had a 40.47 high on August 9th, so that's putting out added further significance to this level. But Dennis, why would an institution or a trader put out an order like that? I mean, they know the high freaks are going to lean on it. Why wouldn't they go like 10,000 at 46, 10,000 at 47, 10,000 at 40? Why do they just? Why doesn't that make more sense? Scale
Most
out
of them, yeah, and most of them do now. This is why you don't, when you see size in the book now, it obviously is very relevant now because you don't see that kind of size. If you go back in like the late 90s, early 2000s, every institution just showed their hand. They basically sat their orders out there, and the specialists would lean on them, the traders would lean on them, everybody would just lean on them. And lean on them, what I mean is like sell in front of them, and obviously if it's going to take it out, then turn around and buy from them. So basically they're leaning on that, trying to limit their risk and getting a look at the trade in the other direction. And that's what happens here too. It's just the high frequency traders usually are the ones that lean the best now. They're the quickest and able to get covered there when it goes there. It's a dangerous game sometimes with the leaning on the size, because when it does take it out, it can be quick. But institutions now break their orders up into algos. They're using different algorithms. They're doing orders in dark pools. They're doing everything they can to not obviously show their hand. But you still have some old school guys out there that it looks like still like to show their hand. And in this case, some big gun is showing his hand with 170,000 shares at 40.5.
Mighty Joe Young is popping in here about Google made a big move yesterday, and perhaps it could be attributed HBO Go announcement on Chromecast. I'm not sure what time that took place, but the stock did have a nice move yesterday.
Yeah,
Google's it's kind of stuck here. I mean, it looks like it's gonna not hold its 1030 level, dips back under it, and then rallies
and reversed. Yep.
Yeah, how you looking at this one, Dennis?
Well, and I was looking at this, and we were talking about the 1030 level being key for it to hold. It did not. It took it out. But then it came back over it again. And you always have to be skeptical. If I'm putting a short on something and I'm taking out the level, I don't want to see that level ever again. I wanted to take it out, get in my favor. I always want the trade working my direction. If it starts coming back up and then breaking back out through your level, you got to watch that the breakdown doesn't become a fake down. And that's what you call reversals or key reversals. And you catch people shorting it. And they're like, oh, well, it's just a little shakeout. It'll be okay. And then all of a sudden, boom, it starts going the other way. So actually, the chart all of a sudden from 2 days ago starting to look bearish, it's starting to look bullish here again. If this thing can start taking out and start trading the 1040s again, I think this thing can make a new all-time high.
Really, a lot of consolidation after that gap up. The good earnings just been trading. Really hasn't spent much time back under the $1,000 level. Been bouncing between 1,000 and the all-time high at 1048.74. I guess I keep it all. I mean, we're still $8 away from it here. 1025 is kind of mid-range of that entire area. A little bit of tug of war going on between the bulls and the bears. JH3 Dennis, he knows about your patented 2-day move, and
Yep.
he's looking for that. What in KeyCorp? Hey JH3, I remember talking to you about that potential double bottom at 12. Was it 1263, 1264? Were you the man bidding there? Or, yeah, it was 12, right? Let me pull it up here. The KeyCorp.
It had a big day yesterday. It
Yeah.
popped up. Yeah, it was at 1272, made the low, and then boom, it popped up. Actually, it popped up with the overall market. And like we've been saying, the financials have been leading this rally. They're the stocks that are hot here again. You got Goldman Sachs that was strong yesterday. Morgan Stanley was strong, breaking out to a new high. Morgan Stanley yesterday. Obviously, Citigroup, JP Morgan, all been strong. JP Morgan breaking out to a new high yesterday. So that bodes well. So your little regionals there like KeyBank had a sympathy move there yesterday too. And I think if this thing can take out $13 here today, 13.10's the high, it could be off to the races again. I do think you might get a 2-day move in this thing. And it would not surprise me if we do indeed. Obviously, it all depends on how strong the market is because we are running into, the 1800 area again where we failed already once. But if we can get some follow through, get up another 5, 6, 7 points, I think stocks like KeyBank could lead the way.
What about do they trade options on this thing? Maybe take a flyer on the weekly 13s there if it gets above and holds. Yeah, 13.
I don't know if they have weeklies on Key or not. They might. And sometimes the strikes, it's kind of random what's on the weeklies. Sometimes there's 13 strikes. There might be there. I could look quickly here actually, but sometimes it's pretty good too. Like I don't mind playing the weeklies on the day. Oh, I'm just looking at my system here too to see what is exactly out there. No, I don't see weeklies there for you, Joel. Actually, I can see just the monthlies on Key. So unfortunately, we won't be able to play that. But KeyBank, the 13 calls were going for 23 cents. That's the December ones yesterday. Doesn't seem like that bad of a trade there. I don't know if it's going to be up here again today, but this thing can break out. It could be off to the races. No weeklies for you though.
I just, taking a look here. Also, Joe just brought up here. Sony Corporation maybe was mentioned at that conference too. That thing is kind of, boy, what a weird pattern there. Through gap up, and gap up again. Finding resistance at the $19. Yeah. Oh, Dennis, gonna go on his ADR hate rant here. But
why? You know why? This is why I hate ADRs, because I have a history with it. And I can remember this stock back in, when I first started trading in 1999, total, TOT. And I was very consistent. Back in 1990, 2000, when you were a day trader, a lot of times we're like shooting ducks in a barrel. It was easy to read the tape. It was easy to read the bid and the ask. It was easy to gauge short-term supply and demand. And we just get ahead of it. And a lot of days I'd make 50 trades and make money on 47 of them. It was so easy back then. And TOT always kicked my butt. And I was like, why do I always lose in this TOT? Because I was still learning back then. And then I'm like, what the hell are these ADRs? What is this all about? It stands for American Depository Receipt. So I started researching a little bit. I was like, oh, this thing's trading over in another country right now. So I'm kind of lagging information here. And I'm still stuck in that mentality here. And I know we're in a high frequency world and everything's kind of, trades together here now. And the high freaks keep it all in line. But at the same time, ADRs, I just don't like trading them. I have a history of them. So that's why. So maybe it's a personal thing with me, but I hate trading ADRs.
Maybe they should be called, for you, AWRs.
Uh-oh.
What? American Withdrawal Receipts, because they take it.
He's hot today. Joel Alconin. He's
Don't
so
encourage
hot
him, Dennis.
He'll be here all week.
Oh man. You-
Before we
We were talking about
finish.
Sony. You wanted to give us a technical before I took your whole
Oh, okay,
one
that's
of
right.
your.
I'm really digressing today. I didn't take my pills, so let me see here. Uh, SNE, really some consolidation here after the couple gap up here. You had 3 days bouncing between 1863 and 1880. So I don't like when you see a big move in something and then you get a series of tight ranges with a top here. So I think Sony maybe going to take a little bit of a breather here. I'd use that 19 as a major resistance level. Before we take our break, Dennis, you got anything else you want to cover before we go into our break? Because I want to give a big shout out here. We got a new guest here in the chat room. Haven't seen him in a while. Mark Robeson, a very good money manager and educator, and glad to see you in the chat room, Mark. And throw a few issues our way. We'd love to take a look at them, but glad to see you in there. Dennis, you got any issues you want to cover before we go to our break?
I think we're pretty good. I was going to highlight General Electric starting to form a little resistance here in the 27 area, and I know some of you guys like to trade the GE stock, and we are seeing an institution sitting with 112,000 shares are all of a sudden 27. So he's looking at yesterday's high and he's looking at yesterday's breakdown. He's like, I'm going to nibble out of some of this GE at 27. So if you're trading GE, it's a big level to keep an eye on.
Okay.
Joel, I just kind of wanted to echo what you were saying, and I see more than a few new names in the chat today. Just wanted to encourage everyone to put any stocks, any issues, anything that you're trading in the chat. We'll have the guys go over it really quickly, kind of give you a spot on analysis, so you can sort of put them on the spot. It's kind of fun. Don't be shy. We're all friendly guys.
And gals, don't forget about Erica. Jake always forgets about her to introduce her when people come into the office here. So we're a diversified crew. But anyways, we are going to take a quick break, and we got a special guest on today. Chris Banyai of Banyai Wealth Management is going to discuss his option strategies and his outlook on the market. We'll be right back with you. Welcome back, traders and investors. We have a very special guest today. We have Chris Banyai of Banyai Wealth Management. Chris, welcome to the show.
Good morning, gentlemen.
How's it going, Chris? And I have a lot of history, and Joel has a lot of history here with Chris, too. I've traded with Chris for the better part of a decade here. We were traders at Bright, trading together from 2003 till over 2010, and now Chris is trading on his own. He's moved on to options. I'm still I play in the options with him a little bit, but I've stuck with equities. But Chris has moved almost entirely on to options here. So, but first, Chris, just give us a little bit, of your trading background there, and obviously your education as well.
Okay, well, I graduated from the University of Windsor with a finance econ background, and a few years later I got my CFA, and I was a bright trader from 2003 to about 2010, 2011, and then I kind of just branched out into starting my own little Bnywai wealth management firm here, and I've kind of started with equities and kind of gravitated to options over the past few years after all the stuff that's been going on with the issues with day trading, with internalizations and all that business.
Okay,
Now,
so go ahead, Dennis.
I was going to say, and obviously you've moved on to options because you feel like there's more of an edge there. We've said it, and I've talked about it for years, that, it is difficult to day trade here nowadays. I always say on the show, scalping is kind of dead to us, where me and you, Chris, we used to be basically market makers on so many different stocks. We'd sit on the bid, we'd sit on the ass trying to make the spread all the time, and now it's just so difficult to get filled on those orders. Is that kind of why you've moved into the option space?
Absolutely. If you try and get filled sitting on the bid or the ask, you still have those supercomputers that get access to the quote or the order feed before you do. So if they really want that position, in reality, you really don't have a chance to even get that position if you want it. You kind of you sit back, and if nobody else wants it, you're the guy who gets stuck with it, almost feels like sometimes. But when you really want a position, you're not going to, the probability of you getting it's very slim, right?
And that's exactly what happens, and that's why I put out a presentation a while ago on limit orders there, and that's what it's explaining is exactly what Chris is talking about here, is you sit your limit order out there, and the problem is by using limit orders, and I'm not saying you should use market orders, but I'm always a fan of taking liquidity, lifting the offer or hitting the bid, especially on liquid stocks where you only have to pay a penny, because if you sit there with your bid out there, basically, everybody queue jumps, they get ahead of your orders, and the only time you get filled is when it blows right through you. So it's kind of hard to be a market maker anymore. So you've had to adapt your strategies then, right, Chris?
Absolutely. Where I would try and, we'd try and make markets, and, you'll be in some illiquid stocks, and you think that, wow, I'm staring at the tape, and orders just came by, and I'm sitting right here. Why did I not get hit? And after seeing that for time and time and time again, you just kind of start to realize that that's not the best game in town anymore, right? You kind of just got to start slowly adapting to new things. With options, you won't see that. You really won't get pennied in options because the option is virtually based on a calculated price, correct? So if you're sitting out there and you want to get done at that price, you may have not the right price, but since you wanted to get out at that price, you're going to get hit because things are based on a calculation. They got a fair value, right? Sorry, continue.
So have you been able to automate any of your strategies? Or are you still pretty much, it's not, you're not necessarily staring at the screen. Do you have built-in filters or scanners that will automatically, when you're away from your desk, have you been able to automate any of your strategies?
No, I really don't automate the option strategies, but I do run filters that will show me stocks that will pique my interest. And I'll always do a lot of research on my own, trying to see, if there's a turnaround story or something along those lines that, or an activist investor came in and that could give it a potential for a little pop. I'm not looking to take a stock from 20 to 40. I'm looking to take a stock from 20 to 25 or 26, because when you make $6 on that $20 investment, I'm doing it through an option strategy where I can take that from $1.50 option to $5 option. Do you know what I mean?
Yeah, so you're looking at it, and that's why you're using the options to get the leverage. And what you've
Yeah,
done mainly there too is extend your time frame. Like you went from this whole short-term trading, market making to pretty much swing trading, correct?
absolutely, absolutely. Yeah, I find you have higher probabilities with having a longer time frame. So I'm looking to say have an option position for 6 to 8 months or longer.
Oh, so you're really holding a long time sometime too. And when you're picking a strike, like how do you, so let's say you get this setup that you want, the fundamentals are lining up, your technicals are lining up. How do you go about picking your strike? Like what do what's your methodology for that?
So say for example, a stock is trading at $16. I would be looking at the 1750 strike.
So you're
And I'm
taking
going to,
something slightly out of the money?
yep, absolutely. I'd never go on something in the money. Like I would never be trying to buy the 15 strike. I'd be trying to buy that 1750 strike, knowing that, I have reasoning to believe that it's going to go to 1750 and higher, right?
Okay, so you made the transition from trading just stocks outright into options, and you talked about the leverage and different things of that nature. What was the process? Did you pick up some books? Did you learn the old fashioned way? How did you make that transition?
Well, at first, it was that transition between stocks and day trading, correct? So I kind of realized that game in town was kind of drying up. So I started dabbling in with stock trading for swing trades, but I found that just wasn't for me, right? Like, here's a situation for you. Say you put $30,000 into a stock, or you can buy the equivalent of that with $1,000 in an option position. That's dated for I don't know 6 months, 8 months. Now you wake up tomorrow and some news hits and that stock's down 25%. So you lose 25% of $30,000. With having that option position, you may just get that $1,000 wiped out. So that's kind of my rationale for being less in stock and more in options.
So you're managing your risk better by using options than you could when you were day trading. Because the difference is when we're day trading, we're in and out during the day for the most part. We don't have a lot of overnight risk. When you're swing trading, you have a lot of overnight risk, obviously. And by moving to options, you find a way to limit your overnight risk in that way, like the risk of news more than anything.
Absolutely. So where you can, and the big kicker about it is that now that you've gone to swing trading versus day trading, it's a capital intensive environment now. So you need the capital to make the capital.
Right.
So through options, you can spread that capital around a lot better than with, instead of buying $1 million worth of stock, you could have $3 million worth of exposure through options. You know what I mean?
Correct. Are you now? You're talking a lot here, and from your responses and stuff about buying stocks and buying the calls and stuff. Do you use your traded strategy in reverse? Obviously, we're in a major bull market here, but if you're accurate at picking stocks that can go up, are you also scanning the universe of stocks for shorts? To diversify your portfolio a little bit, or are you just kind of a person that's leaning with the market? The market's going up. You're just going to play the long side.
I would say right now I wouldn't do as much trying to hedge the portfolio. Every time I've ever tried to hedge a portfolio, it seems to always just blow up in your face in the end. I would say move more to cash and just have less in the market. If you start to have that feeling that the market's going to start, you know, having a short-term correction or pullback, like right now, like after being up this high, I'm probably 30% in cash versus at the beginning of the year being maybe 10% in cash, right? But I would start scanning the universe to put short positions on just how I'd put long positions on. For example, the mortgage refinancers, NSM, OCN, and WAC. Recently, they were it was a bullish to bearish scenario where these things couldn't make enough money. They kept making money and money and money, and all of a sudden, one came out and just blew up. So I put positions on the two that I've been following. So I had already had these positions on bullish, and I had taken them off throughout the year. And then after I saw that one report come out, interest rates going to go higher and stuff like that, I'll start putting on puts like that. But I'm not going to go out of my way to start looking for puts now. Not yet, anyways.
It sounds to me like what your whole strategy, like with the option strategy, is you're trying to eliminate the noise, really. Like you're getting an opinion on the stock where you have a fundamental opinion of whether this, company is going to outperform or underperform. And then you're trying to put up, a trade on it out 3-6 months out. So you're basically, making a fundamental opinion on the stock, probably using a little bit of the technicals to maybe time it a little bit better. And then that helps to eliminate the noise because it's, high frequency trading, day to day chop, and all this other stuff. And do you find, like, in this 3 to 6 month time frame that does help you to hold the positions better?
Absolutely. If you put a position on for 4 months, 6 months, 8 months, you can handle that 20, 30, 40% drawdown in that stock position and still have the exposure to it. Anything can happen in that time frame. You could have a takeout, the company may have had just one bad report, and the next quarter they come with a great report. The best situation I probably could analyze that is that with the solar companies. About 6 months ago, they were unbelievably hot, and then they hit a rut, and they all tanked maybe, 30, 40%. And then, it came all the way back. And I had positions I had put on in SunPower and First Solar and Sun Edison 6-7 months ago, and I've had the exposure in them. And then, they've came all the way back. They really, I wrote them off. Like they just sat there in the portfolio, and I said,
These were options for you, yeah.
Yeah, nothing's going to happen there. I'm just going to eat it. But then, it starts getting hot again, and next thing you know, they start taking out new highs, and they all turn into profitable positions.
So you basically had all these option positions that you had put on, for $1 or $1.50, and you had just basically said, well, I'm going to lose those dollars on all these option positions. They're not going to work out. But you actually didn't liquidate them. Rather than sell them at a nickel or a dime, and you hold on to them, and they're almost like little lottery tickets down there. And if something does eventually turn around, those things that you basically said, well, I'm already, those are probably dead money, can eventually turn around for you sometimes, and those little lottery tickets really worked out here in the case of the solar companies.
Absolutely. And you'll put a position on, and I'm never going to try and hold something to have a 10 bagger on it. Like I'll put a position on and I'll scale out, it's up double, it's up 2.5, it's up 3, it's up 3.5, and I'll scale my way out of it. So I'm never looking to hold something for expiration and hope that it gets to, like, I'm not setting a price target. I'm just getting out profitably, right? So when you'll keep continuously rotating positions, and you'll get out of stuff. It could be a week, it could be a month, it could be 6 months, and those solar stock situations, but you're continuously rolling, right?
With the solar stock situation here, now you put on the initial position, and it went against you a considerable amount. And you didn't liquidate, but in those situations, are you still firm in your convictions? I mean, it's a golden rule, don't frown, average down. Are you tempted to do that if you own a bunch of options at 20? The price goes to a nickel. You're still confident in your position. Will you pile in and try and bring your average cost down, or do you just say, hey, I took this position, it's going against me, I'm just going to sit it out and ride it out?
Eventually, it all comes down to how much I think that it's going to work out. Like obviously some positions are going to have a little bit more risk than other positions, but a perfect example, Santeris, a pharmaceutical stock.
This symbol on that, Chris?
SNTS, Sam, Nancy, Terry, Sam. This was, I'm big on looking at the fundamentals. I'd call myself like a techno analyst, I guess, techno fundamentalist. And I look at a lot at the quarter over quarter growth in sales and EPS. It kind of gives you the true meaning of a growth stock. So it kind of really tells you how growth is happening in a company. Like, you don't look at it beating consensus for the month or the quarter. That's just numbers guys put together. It's based on the company's growth, right? So this company was amazing, kept growing. It's growing sales at 60, 70% quarter over quarter, EPS 100% plus quarter after quarter. And it got in a rut. Like, it got up to 28, sat there, got all the way down to 20. And I was convinced that, it's going to put out another good quarter. It's going to put out another good quarter. So you start buying it gets down to 20. It's just at 28. You're buying the 25 calls for $1.85 short term, like for the next earnings report, so November. So plus you have positions on it going into on top of that. And next thing you know, they come out. I'm waiting for earnings reports, and they get bought out by Salix Pharmaceuticals for 32 when it was trading at 23. So that's a situation where I was convinced that it was going to put out good numbers, and it still put up blockbuster numbers for the quarter, but it got bought out at the end of the before it could even report the numbers. So it's stuff like that where if your conviction is high enough, then I'll add more aggressively to positions, right? Doesn't work out every time, but usually, you want to put your money in the best of the best, right?
So I like that term that you use, techno fundamentalist. So you identify the fundamentals in a company. How much attention do you pay to technical analysis? Do you have some favorite indicators that you like to follow? Obviously, you're doing some longer term trading. So how do you, once you've established your fundamental opinion on the stock, how do you translate that into the technical analysis?
Well, my favorite way to look at, I'm more of I've obviously considered myself a techno fundamentalist, but I'm looking for solid growth companies, not really momentum companies. I'd throw like a Tesla or an Amazon, or when you got to start coming up with metrics that aren't earnings or revenue to say that the stock should justify that value. I want to know the EPS and the sales growth, and I'll look at a quarter over quarter basis. So I'll look at the past history of the quarters, probably the last 4 quarters, and then I'll look at the next 2 quarters, and based on the trend of the growth in earnings and revenue the past 4 months, if they can have an attempt to really crush the numbers the next 2 quarters, then I'd be willing to put money to work in options for 6 months to a year, and then sometimes I'll just buy the call that I want to purchase that's out of the money, and if things aren't working out, sometimes I'll add to the call, and sometimes I'll put a leg on of selling a lower put. So I'm convinced that from what I'm seeing that things are going to take off. It could be this month, next month, 2 months, 3 months from now, but usually the best case scenario is when things line up where the fundamentals are peaking right when the graph is trying to break out, right? Like, you'll see the buyers come in with volume spikes and stuff like that. And if you get a solid breakout with that fundamental background, then your probabilities are through the roof on that trade.
So you are looking at the technicals and trying to time it. So when you see that all, where a stock consolidated for a bit, but it's been moving higher. I know you're always a big fan of, like, you're not afraid to buy a stock when it's making a new high, right? Like, a lot of people are very
Absolutely.
hesitant to come in and buy stocks when they're making new highs. They like to come in and buy stocks when they're making new lows. And I know, and you've actually helped me, through that too, where I've always been a fan of buying low, selling high. But you're kind of like a buy high, sell higher guy, right?
Absolutely. Like, people don't realize that when a stock breaks out to a new high, there's no previous remorse up there. There's nobody that, bought up there and had to fall off and get back up there, and they say, I got my money back, I'm out. It's all fresh buyers as soon as it hits a new high. So that thing could go 5% and stop, could go, in the case of Tesla, it went hundreds of percent higher. Like, there's nobody else there. There's nobody to stop it from going higher until either the market turns hard or or the buyers dry up. But it's free run. That's why I look at this market right now, and people want to start calling tops, and it looks toppy, and we're in a bubble. The reality of the situation is, it's all fresh buyers taking this higher. That's key. There's nobody there to sit back and say, okay, I've felt the pain. I got my money back. Let's tap out. It's all fresh. So that's the key, right?
Now talk about your Tesla trade, because you mentioned this for a while. I know you were telling me, and you were all over this Tesla, and I mean early. When will you start to first buy options in Tesla?
I was starting to buy options in Tesla. Probably it broke out above 40.
40,
now,
$40. So you're going back to when was
I
this?
remember that $40 level, and that thing held up. I don't know if we can pull it back on the weeklies here, if it will give it, but I remember that level. It just kept hit. When was that? That seems like it was forever. I guess if you go on the weeklies here, not too long ago, it was back in April on the daily charts. Man, it was hitting its head against that thing. I don't know, 6, 7, 8 times.
Oh, absolutely, and it stayed in that range ever since it came IPO, right? So it finally took out its first range on 664% above average volume.
And that's when you start looking at it, when it starts breaking out to new highs.
Yeah, that caught my eye in the trade. Okay, and lucky enough, it drifted down to like 41, 42, and I started starting to do my homework on it, looking at it. And the best case scenario is when you can get positive uncertainty in a stock. So you got Elon Musk coming out, and he's starting to tweet, it's looking scary in Shortsville, and like, we're going to produce our first profit at this quarter and stuff like that. And then he comes out and says, I'm going to come out with a new tweet every week for the next 6 weeks or 8 weeks or something like that. So I saw all this coming together, and, you're starting to get some chatter in it. So I'm starting to, it's at 40, 41, 42. I'm starting to look at buying 50 calls, 60 calls, spreading it, going long-term out a year and putting on $25, selling the 25 puts, buying the 60 calls and selling the 85 calls or something like that. So I'm trying to attack it from as many angles as I can, as cheaply as I can, with the least amount of exposure as I can. So lucky enough, they came out with earnings, pops. I'm liquidating as soon as it's hitting between 70 and 90, and I look back and it's probably the best trade of the year, and it's probably the worst trade of the year at the same time, right? It goes up to 200 eventually.
Yeah, if you would have been holding it, you'd have been retired.
Yeah, exactly.
Yeah, but still, wow, that's impressive though, Chris. So what is on your radar now? Like, you've had these Tesla trades and you've had some great trades, and I know you've had a great year trading here. What's on your radar right now? Like, what is the next Tesla here for you? Or maybe not the next Tesla, but the next hot stock.
You look, and it's hard to, I would say this, a situation like that Tesla where the stars kind of align, that maybe come around once every 5 years in that situation. But by casting this wide net and having a bunch of positions, you can get
how many positions would you have on? Like, how many, like, I know you're like a hedge fund man. How many positions would you put on or have on right now? Like,
I've probably got maybe 70 or 80 positions on.
70 or 80 positions on. So you're massively diversified too.
Yeah, but I would say, like, I'm always looking up on earnings reports. I believe a lot in the post-earnings drift. So basically, either the market is going to move a stock, or the company is going to move a stock. So you got a market right now that I personally don't think we're going to start crashing, and I personally don't think we're going to go to the moon. I think we're going to stay in this area, maybe bounce around 50 points up or down for the next, I don't know, month or two, until you get the government stuff dealt with in January. So that is a safe enough environment to start looking at post-earnings drifters. So you get a company that comes out, beats top bottom, raises guidance. Like, to me, that is a situation where, unless something terrible happens with their company, they get hit with a lawsuit or something, or they're making defective products, that thing's going to drift. higher for a bit. So I'd say a perfect example of that is New Skin, NUS. So these guys make they're very big in Asia with women's face creams and stuff like that, or cosmetics basically. So they just came out, and even yesterday, so they guided high. They beat top bottom, guided higher at the earnings release, and just came out yesterday. I think they had an investor meeting or analyst meeting or something, and they raised on top of that. So I think I was telling Denny there, they were lucky enough the day that the earnings came out, it went from 100 to 115 all the way back to 102. So that was like, you don't really usually get situations like that to be able to put on a lot of stock when you know that it's a great stock and company when it pulls back like that. So when that situation happened, I'm starting to load up on that at 102, 103, 104, 105, just in options, not buying physical stock. So I think I bought the call, the 115 strike for that month. Like I said, I usually will not do day trades. Like that's what I'd consider a day trade, like maybe doing the monthly call or monthly option. So I think within 3 days that thing was back at 115. Now it got up to 122 or 121 yesterday. So this all happened within a month.
Are you just get your opinion here? I mean, you got the new IPO on the Twitter. I know you used it to your advantage with the Elon Musk and Tesla trade. We've had this thing open for almost a couple weeks here. Pretty good ranges. I know options just started trading on it. What's your outlook for shares of Twitter?
I think with Twitter, you got to kind of go right back to the Facebook playbook. Basically, everybody and their mother had an opinion on Facebook. It's the next great thing. It's terrible. Everybody hates it. No one's looking at it anymore. And it really, you could have bought it in the early stages of the first month and got destroyed. Bought it 4 months later and made a killing. But the proper time to get in that thing was when they came out with that earnings crush. That was the game changer. That was the inflection point. And that's kind of what I think you got to do at Twitter. I think, it could have go up to 50, it could go up to 50, it could have go down to 20, it could go down to 20. But in the meantime, I'm going to sit back and I would wait for, concrete evidence of that it's going to make some money, right?
Okay, so final tips here, Chris, for everybody, because you've been around the block. You've been a prop trader. You were a prop trader for 7 years. You're now kind of running your own options trading firm here now. What are your tips out there, for traders who are just starting here, and what do you think, they should look out for?
I would, if you're stuck in a rut and you really can't get anything going, I think it's never a bad idea. Like I did a lot of reading, and I still do a lot of reading, and I believe in it. Like I feel like you should always be doing research. I think you got to invest in yourself. I did a lot of reading of trader interviews. So read a lot of the Schwager books, and there's a bunch of other books out there on interview traders. And as you read all these interviews, you start realizing that there's some strategies are timeless, right? You'll see guys talking about the same thing in a slightly different aspect, but there seems like they're talking about the same stuff. And it's a lot to do with like trend following and stuff like that. Like you got to etch out your own type of strategy with the main types of core strategies like that. So I would say, get some idea generation going. Don't quit, and don't be afraid to venture into new things. Like I ventured into options, and it took me a while to figure it out, but it seems like everything's on the up and up now. So don't be afraid. Get in there. Don't quit. It'll come around.
Okay, so we're going to close out the interview. I know you and Dennis were in the trade cave during the financial crisis or anything, and
there'd be some good stories there.
Yeah. So we're going back and forth here. I mean, could you just give us like your favorite Dennis trading story, real quick?
Let's see.
Put him on the spot.
He almost set the house on fire one time.
Yeah,
no, I'm kidding. No, it was a lot of good days. You got in that groove where sometimes just felt like you couldn't do anything wrong. So it was some of my best memories I've ever had, going and getting in there and having a good time and day trading and making markets. And there's no real crazy stories, just a
You
bunch
know what
of
was
good
crazy,
times.
Chris, is that financial crisis, though. Like, talk about
Oh
how
yeah,
we were trading during the financial crisis. And I tell you guys, 2007, 2008 blew away. For me and Chris, those are the best trading years of our lives. I've been a prop
oh
trader
yeah,
since 99. And, and it's good. And Chris has really found something with the options here now. But that 2007, 2008, it was unbelievable, the trading. People were just throwing everything out. Just unbelievable.
it
Just
was
talking about
it,
some of those days, man.
it was a pair trader's wet dream, is what I would say. It was the most. If you had pair trading skills, like, you could have just, it was unbelievable.
Because
Yeah,
relationships were just getting thrown out the window. People were
yeah,
just like selling stuff, and I just sell it and don't even worry about where you get out. But there's relationships there, real relationships there between stocks that hold in the even in the short run. And they're selling stocks, and you could pick up something and sell a similar asset, and within minutes, you're back up in the thing. So we were kind of just playing a market making role back then, and just really cleaning up from it.
absolutely. When you have all these financial stocks, and you've got the major banks, they've all got 15, 20 other types of stocks out there, whether it be
Birds, yeah,
preferred stocks or like structural management
prop.
assets. Like, you see the parent company trading down 15%, and you see some of these that are the exact same company, exact same assets, everything, sitting there flat on the day. Like, some stuff was just a no-brainer, right?
Remember the Bear Stearns and the Fannie Mae plays we had? Like, we had a
Oh
few
wow,
where Bear Stearns had went from like 180 down to $80, and its preferred stock. I remember this one. We just loaded up in it. Was still sitting there flat at $25, and I remember even saying to my wife, I was like, you know what? With Bear Stearns, I remember saying, I don't know if it's going to go bankrupt or anything, but is it possible that there could be some serious problems here? And this is before the financial crisis started. We're talking like May or June 2007, and me and you just started shorting that Bear Stearns preferred F flat. I was like, our risk was like 6% or 6.5% because that was the coupon on the thing, and I'm like, there's really no upside because it's trading at par really now, 25. So I mean, there's really the downside really was the risk of paying the coupon at 6.25. But I'm like, what if there really is trouble here? And then what was it, like 2 or 3 weeks into that trade, Bear Stearns has collapsed, and we just collected on that.
oh yeah, just unbelievable. And the confidence that we had, like, there's 50,000 shares on the bid. I'm taking 25. You taking the other 25, and
Yeah.
and then you'd move on to the next.
Yep.
There's 30,000 shares there. I'm taking this many. Do you want them? If you don't want them, I'm gonna take more. And you'd say the same thing to me. And next thing you know, we're just short the financial world. Unfortunately, like, I don't want to say that I contributed to all that and all whatnot,
Well,
but
we didn't
it's
contribute
just,
to it, but we definitely profited from the
yeah,
the idiot,
absolutely,
the how basically the subprime and the financial crisis. Like, the banks got
absolutely,
over levered in that, and we took lower risk bets on them. The commons were collapsing, but the preferreds were lagged. They lagged, and we got short. Fannie and Freddie, we were short a pile of preferred stocks, and it took a few weeks into the trades, but those things eventually paid out big time.
absolutely.
So, and that's what it is. It's all about finding those different opportunities. And when you do find something, that you're pretty confident in, just strike hard. So, and Chris did very well with that.
Okay, I know you guys are getting close to the open. Get ready here. Chris, thanks a lot. That was a great interview. We'd love to have you back on again. And have a good training day, a good weekend, and thanks for coming on.
Thanks a lot, guys. Same to you, and yeah, I'd be glad to be back.
Okay, we're going to slip over here to Mighty Joe Young with some headlines.
Oh, it's finally my turn. Oh my gosh. Well, thanks, Chris, for coming on the show today. It was really great. We appreciate it a lot. And thank you, Dennis, for introducing us. Although I don't think that Chris told any Dennis stories because Dennis stuff on Chris. At least that's what I think, anyways. So, Moving into today's headlines, the Dow closed above 16,000 for the first time on Thursday as stocks rebounded from 3 days of weakness after economic data pointed to a slowly improving labor market and subdued inflation. Financial shares led the market to its first day of gains after 3 sessions of losses. Although investors remain unsure about the timing of the Federal Reserve scaling back of its $85 billion per month in bond buying, some say the market will weather the eventual pullback in that stimulus. Many prominent managers at the Reuters 2014 Global Investment Outlook Summit believe the record-setting run-up in U.S. stocks is due for a reckoning, but acknowledge that ample liquidity could push equities higher regardless of fears. The S&P 500 has jumped around 26% in 2013, with major indexes notching record high after record high. Investors pointed out to potential drags on the market next year, be it a pullback in stimulus by the Federal Reserve to weak earnings, that have made this market look expensive from a valuation basis. I'm very cautious on equities today, said billionaire Carl Icahn, among the world's most influential investors. Silicon Valley jury on Thursday added 290 million more to the damages Samsung owes Apple for copying vital iPhone and iPad features, bringing the total amount the South Korean technology titan is on the hook for to 930 million. The verdict covers 13 older Samsung devices that a previous jury found were among 26 Samsung products that infringed on Apple patents. The previous jury awarded Apple 1.05 billion. But U.S. District Judge Lucy Koh reduced the damages to $640 million after ruling that that jury miscalculated the amount owed on 13 devices and ordered a new trial. Samsung said it would appeal both verdicts. Sprint has dropped to last in Consumer Reports magazine's latest annual cell phone service rankings. I know you're listening, Dina, and I told you I was right. After being second among the major carriers in last year's rankings, Verizon Wireless once again took the top spot for the majors in the survey of almost 60,000 subscribers. Sprint has been working for years to turn itself around and had managed to lift its reputation for quality off the lows it suffered in the middle of the last decade. But Sprint got dismal remarks this year for value, voice, text, and 4G reliability. I know that every time we go up north, Consumer Reports said. Well, they didn't say about the up north part. The country's third largest carrier behind Verizon and AT&T is in the middle of a complicated network upgrade that it hopes will allow it to catch up with the market's leaders, which have already rolled out extensive fourth-generation LTE networks. Spurning President Obama's call to let insurers extend canceled health policies, California won't allow 1 million policyholders to keep their health plan for another year. The board of the Covered California Health Exchange voted unanimously to break with the president and keep its requirement that insurers terminate most individual policies on December 31st because the policies don't meet all the requirements of the Affordable Care Act. Officials acknowledge that their decision won't satisfy angry consumers and will mean many of them will pay significantly more for new coverage come January. But they worry that allowing widespread renewals could cripple the rollout of the healthcare law in California, just as enrollment is picking up steam. Volkswagen, Europe's largest automaker, will maintain a high level of spending on developing new vehicles and upgrading factories over the coming 5 years to underpin its bid to become the world's largest automaker. VW plans to invest 84.2 billion euros, or 114 billion US dollars, through 2018. The Wolfsburg, Germany company said on Friday in a statement. The plan calls for a reduction in average annual spending on property, plants, and equipment of about 500 million euros a year compared with its previous budget. The web streaming battles continue. Amazon, a competitor to Netflix, announced an exclusive deal Thursday morning to add releases from one of Hollywood's most attention-grabbing independent film companies to its Prime service. Movies from that film company, A24, will become available on Amazon Prime shortly after their arrival on Blu-ray and DVD, Amazon said in a statement. A24, a film distribution, financing, and production company based in New York, is only a year old, but has already found a cluster of provocative titles, including Harmony Korine's Spring Breakers, starring James Franco. NBC Universal is close to a deal to take a a minority stake in a new company being started by technology journalists Walt Mossberg and Kara Swisher, say people familiar with the situation. Mr. Mossberg and Ms. Swisher now run All Things D, a website owned by Dow Jones and News Corporation. The unit also publishes, the News Corp unit that also publishes the Wall Street Journal. In September, Mr. Mossberg, Ms. Swisher, and Dow Jones announced that they wouldn't be renewing their partnership when their contract expires at the end of the year. As a result, Mr. Mossberg, who has been the journal's personal technology columnist since 1991, is leaving the paper. Sony Pictures CEO Michael Linton just laid out the new plan to investors as he discussed ambitious financial goals for the company's entertainment units. That will include a significant shift in emphasis from motion pictures to higher margin television, production, and distribution. The company says that Sony Pictures should generate $8.4 billion in revenue in the 2015 fiscal year, with at least a 7.5% operating profit margin. He added that the music segment should report a $4.8 billion in revenue in 2015, growing flat to slightly up through 2017, and a 9.5% operating margin growing by mid to high single-digit rates. Today's trivia tidbit: 50 years ago today, William Clay Ford bought controlling interest in the Detroit Lions, who have since gone on to become one of the least successful sports franchises in history. The $4.5 million deal took place during the morning hours before the other events of the day flipped the nation, which Shubs has provided zero details on. 50 years ago today, John Fitzgerald Kennedy was shot in Dallas, Texas, and pronounced dead 30 minutes later while he was visiting the state to smooth over some fricas between the Democrats. Let's see here. Smooth over between Democratic Party liberals Ralph Yarborough and Don Yarborough, no relation. And that about wraps it up for my headlines here. Joel, where were you when Kennedy was shot?
I was in my crib.
Yeah, well. So Joel wasn't responsible for it. He was not the second gunman. We know that now. So with that, I will hand it to Brent to take us through the open.
Oh yeah, Joe? Yeah, you want me to take you through the open?
Yeah, I would like that very much, actually.
Okay, sure. Yeah, I'll take you through the open. Yeah,
Thanks a lot, Brent. You're a real gentleman.
Oh,
And there's the bell. Ding, ding, ding.
Ding, 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 ding. What do we got here? Let me check. We got the Dow Jones trading down about 8 points. See what the Nas is doing, or excuse me, the S&P. I see S&P futures 1794. What's the reading on the good old regular S&P? Joel, will you help me out with that one?
We're looking at the all-time high. We hit that in the pre-market at 96.75. 96 even was yesterday's high, so we're bumping up against that in the pre-market. That's really the only levels that you have the key on. We usually don't get any kind of follow-through on the downside until we take out that pre-market low at 17.92. So we'll keep an eye on that. Let's move into some issues that had some earnings and some ratings changes here. With earnings, Pandora here seems to be having a good session here. Let's see what we can find out about shares of Pandora. They did have actually a gain. They are trading up here, $1.40 here, approximately $1.30 at 30.92. Pandora in the pre-market had some impressive gains. Made a high in the pre-market in Pandora at, I'm having a hard time bringing up the chart here. Pandora Media here making a new high from the pre-market, 31.37. I believe that's an all-time high for the issue here. Yep, it is. You did. Nope, it's not. 31.94. That was the high that you had it last week. So another resistance up $1 in shares of Pandora.
So that's up 13% from the post-market low. Does that look right, Joel? That's a huge move. You're right. Do you see it? Do you see the the post-market low 27.40? Does that look right?
Yeah, we did talk about that. It did have a spike down and then quickly recovered here. So we'll just keep an eye. The 31.94 was the level that it hit last week. I've only gotten to 31.37 in today's trading. Gap Stores came out with the earnings today. We talked about that major resistance here at the $42 level. Haven't been able to reach it in the trading yet. I think it did sneak over it in the pre-market. So we'll be Gap Stores can rally back up to the $42 level. We'll be looking for resistance in that issue. Also, who was that? There was a downgrade. Okay, let's take a look at this Target, the French retailer. Bad day yesterday. Took it down to the 63.50 level. Was able to recover and ended up having, still had a bad day, but posted off the lows here. Bank America coming out with the downgrade here. You go to 63.50 here in the session, 63.49 yesterday's low. This area was also supported going back in October. So we'll see if we can get the move here 63.50 level. If not, you have to look at this area as major support. We'll be watching that one over the next few days here. Foot Locker off and running here on its earnings play, gapping up and going. Let's see how carried away it got in the pre-market. In pre-market trading, Gap Stores did get over the $39 level. Pre-market trading, keep an eye on 39.04. We have only gotten to 39.06 here during the regular session. Perhaps an institution targeting this $30 level as an this $39 level as an exit point. Let's take a look at Key Corp. JH3 was looking for the 2-day move here in the issue. The stock has just been struggling with the $13 level. That still seems to be the occasion today, so we'll just keep an eye on the resistance at in 13 in shares of Key Corp if you're trading that. Other issues, Ann Taylor out with earnings today. I know Lisa used to buy a few things there, not recently, but that stock is making a nice move on the upside. These retailers are usually all or nothing here. Let's see what we've got going on from the pre-market trading. The stock did make a high at 36.80, but we've taken that out in the pre-market. We've gone to 37.40, backed off that level, nearly a buck range here in early trading in shares of Ann Taylor. You just keep an eye. I mean, you would have had to been quick, but yesterday's high was 36.42, and on that dipsy doodle down, it was actually open lower. It filled that gap and then took off. So 36.40 area, very key in shares of Ann Taylor.
Joel, I'm watching the Dow futures pretty much tanking right here. I see down about almost 40 points over since around 8:30 when the Dow futures were over 16,000. I don't really see the S&P futures following that move lower. What are you looking for in Dow? I know you guys are definitely S&P traders, but you got any levels in the Dow Jones?
Let's see if we can scramble through some of the components here and see if we can find what's dragging the Dow down. Is it IBM here? Let's see. Let's see if we can find. I don't even know what the Dow components are. Let's take a look here. IBM's flat. Nope. Just had one big seller come in there. Marvel, that was out with earnings yesterday, I believe.
Yeah, last night after the close.
Yeah, well, Dennis missed that one here. Well, they must have been marvelous earnings because the stock is gapping up here, making a new high for the move. Let's take a look at the daily chart, see if we can find some potential resistance. Is this the comic book maker?
Nope, that's Marvel. This is Marvel. This is a tech company.
Okay. 1451 high here. We backed off a few cents off that. There wasn't a whole lot going in the pre-market. Actually, pre-market it got higher. It got over to 1480, running into resistance here at 1450 though during the regular session. But Brent, with the keen eye over there on the news desk, saw the little drop in the Dow, and now the S&P futures are following suit here. Let's see if we can get a little action here. S&P futures, they're negative, they're red. Oh my God! It's time for QE4. 1792 is the pre-market low. We've dipped down to 1792.75. Usually don't get a lot of follow through on the downside until you can take out that pre-market low. So we'll keep an eye on that. We're buck and a quarter away from there. Uh, X did get a downgrade here, and it had multiple lows at the 26.75 area. It has taken that out. Shares of X are trading lower by 84 cents. It actually, if you were quick off the open there, and shares of X, they did open up at the former support level, and then I've kind of taken it out here. We've gone as low as 26.29. Still looking at this lower 26 handle as possible support. You had a low at 26, had three lows in a row between 26.13 and 26.26 going back at the beginning of the month. So we'll see. I wasn't totally convinced this one was going to get hit, but certainly off the open, it had a little bit of a decline. The other downgrade, Nucor here. Now this one is a little bit more interesting here. We talked about the multiple lows at the $52 level, and wow, that thing opened up pretty well. Only opened down a half a buck here off the downgrade. Opened up. Now yesterday's low was 52.52. If you were using that as a potential entry plate on a short, you did pretty well here because it only made a 56 high. The old former support, new resistance, but like I said, you would have had to been quick on that one. We have cut down under the $52 level now. Things are not looking pretty in this 51 handle. Multiple lows around the 51. So resistance moving up now to that $52 level. Those people that bought there on the other three occasions may be looking to get out, but don't like the way the chart looks on this one below 52.
I got a couple of big movers for you to take a gander at this morning, Joe. How about Ariad Pharma? That is Alpha Romeo India Alpha. Stocks up 30%. They had a company, the European Medicines Agency, gave a positive opinion on the company's Iclusig. Where are we at right now? Around 362.
Didn't this thing get pounded back a while ago?
Yeah, it's been a rather momentous name recently. I'm looking back at a 66% decline. That was on October 9th. Continued through the next couple of days, down 7% the next day, and then down another 20% on the 11th of October. Really, really volatile lately. Today, more of the same.
Well, it's moving up here nicely, getting, with these drug stocks, we talk about it all the time, these pharmaceutical stocks, a lot hinges on the FDA and the approval or disapproval here. The stock gapped up nicely here, closed at 279, opened up at 349. For this kind of scenario, I'd just be looking at this thing. You opened up at 349. Had a nice run up to 372. Obviously, you can see just a mountain of resistance here. After it had the bad news, had a little recovery to the $4 level. Multiple highs between 422, 428. So that's your major resistance. But if you're playing this thing off the news here, buying it off the open, just keep an eye that low at 346 coincided with the open, so I think you're going to have a lot of company there if people just bought this thing on a little Momo trade. If you slice back down through that opening low at 346, you got a ways away to fill the gap. Going back on the upside, that 422, 428 level is huge. And what was the other mover you had?
How about let's go with Splunk, SPLK. They had earnings last night, had some strong guidance, raised their fiscal year 13 guidance. We have shares of Splunk up 17% today. That's about 10 bucks.
Splunk is no punk here. Boy, good news is taking this stock up, but I don't like to see that kind of thing. When you open up and you make a high and then you back right off it. Let's just take a look at the technicals here. Is this one of these 3D printing companies or what? I'm not going to throw you under the bus like I do Dennis all the time, but they do. They do.
It's no, they're a software company.
Software. Okay, well, they're doing a good job. You got that $3 run off the open. That's a new all-time high at 72.86, and you pulled back over half on that. Boy, I just would say what you've had 3-point range, buck and a half. I'd say really if you want to see it go back up and continue to rally all day long, you need to hold back this. Need to hold this 70.50 area.
We got DJ asking about shares of Gilead, Gulf India, Lima, Delta, also related to the European Medicines Agency granting marketing authorization for holy cow, Sofosbuvir. Wow, that's a mouthful.
Yeah.
DJ, maybe you can help me out with the pronunciation on that one.
That's Mighty Joe Young's favorite stock here. Let's take a look at that.
Favorite stock alert. Favorite stock alert.
We do have those on the show here. Gotten a pop up to a new all-time high, 74 and a quarter. Boy, if you had another here, opened at 72.86, only took a penny worth of heat there, 72.85, and then you had a rocket ship to a new all-time high at 74 and a quarter. What do you got there? You got about a $1.40 move there, 70 cents. So 73.50 area marks mid-range on the day. Like to stay above that 73.50, and you can go back up and challenge that 74 and a quarter high, all-time high that you just made in shares of Gilead Pharmaceuticals. S&P's just kind of lingering here, down a buck, missed the pre-market high by $1. You also have the significance of yesterday's high right in that area. So if you're trying to pick a top like I do all the time, go ahead and short it here and put your stop at 17.97 so they can get you coming back on the downside. If we do take out this pre-market low, which we are very perilously close to here, a buck away, I do see a minor support number at 17.88 and a quarter.
Joel, I wanted to alert traders to crude oil, which is just getting creamed right here. Was trading a barrel of crude trading up 95.60 almost right after 9 a.m. Now we're down to 94.50 per barrel. Huge move lower in crude.
Okay, let's take a look at the crude chart. As I always forget to put the symbol in and bring up Colgate Palmolive all the time, which I don't know. Anybody remember Madge from the Colgate Palmolive commercials or not? Nope, dating myself again here. Let's take a look at the crude contract here. Failed at yesterday's high, which was 95.63. Only got to 95.67 in today's session. Slippery slope here. You don't have any major support in the 94 handle. You sneak back down to 93.57, which was yesterday's low. But we're going to wrap things up for today. Hope we provided you with some good information on the markets. Thanks for joining. Have a good weekend. We'll be back with you on Monday.